Hello and welcome to the EisnerAmper Engaging Alternatives podcast series. I'm your host, Elana Margulies-Snyderman, and with me today is Don Casturo, founding partner and chief investment officer of Quantix Commodities, a sub-advisor for Harbor Capital Advisors. Today, Don will share his outlook for commodities investing, including the greatest opportunities, challenges, and more. Before we dive into the conversation with Don, don't forget to hit that like button and subscribe to EisnerAmper wherever you listen to your podcasts. And you can also find us on YouTube at EisnerAmper. Hi, Don. Thank you so much for being with me today.
Oh, thank you for having me.
Absolutely. So to kick off the conversation, tell us a little about your firm and how you got to where you are today.
Well, I'm basically a career commodity guy. Coming out of business school, I entered into a Wall Street Bank's securities division rotation program. And the first rotation I had was in commodities. Never made it to the second rotation and basically have been in commodities for my entire career. Spent 20 years at Goldman on a variety of different commodity desks. Very interesting times, particularly the 2000s as the Chinese demand boom was really impactful in the commodity markets. A little quieter post the global financial crisis, but I felt in 2018 it was the economic cycle was sort of foretelling a resurgence and revitalization of commodity markets, and decided to leave Goldman to start with a couple of guys from there, an investment management firm to put ourselves in a good position if that did come around. And sure enough, the last 7 years have been very exciting in commodity markets again.
At EisnerAmper, we are creative problem solvers that take a 360-degree approach focusing on you. We're an award-winning firm with decades of experience. EisnerAmper, let's get you ready.
Great. So given your focus on commodities investing, Don, I would love to hear your high-level outlook for the space.
I think it's going to be a very exciting time for commodity markets. As I mentioned in my first answer, basically post-global financial crisis was an outstanding period for the 60-40 portfolio, and commodities were a bit of an afterthought. And even though they provided diversification at the time, a lot of things I hear from investors is like, who needs diversification when the other two things are working so well? That's not really the case anymore. Post-pandemic, inflation has come back into the investor's lexicon, and that implies maybe thinking about some other things to protect your portfolio. And we think commodities plays a very important role in that diversification can really add benefits in environments that we've seen for the past several years and are likely to see going forward.
And Don, more specifically, what are some of the greatest opportunities you see in your space and why?
Specifically with regard to that inflation threat is that I think it's being underscored by a pretty significant transition in the investing framework. Basically, we've had decades of globalization that has created efficiencies in the flow of capital and really allowed for the supply of commodities to be done pretty cheaply to fuel growth. As we're moving into an era of deglobalization, inherent in that are some inefficiencies where there'll be some duplicity of supply chains and a lack of free flow of capital to stimulate supply growth, all of which will provide, we see, bullish tailwinds for commodities and something that will contribute to that inflationary effect. And really the only way to protect against that is to own the commodities.
And Don, on the other hand, what are some of the greatest challenges you face in your space and why? I
would say in starting at Quantix, one of the biggest challenges we faced was really the barriers to entry in the institutional barriers to entry for long-only investing. Basically, the hurdles required from institutional investors, whether that be the retail platforms or just large pools of capital's investment committees, are quite significant in terms of track record and AUM. And as a result of that, I think there's a lot of high-quality emerging managers, despite their pedigree and quality of product, that may never see the light of day. Fortunately, we've gotten through that, but it was more significant than I imagined when we started Quantix.
Don, we've covered a lot of ground and wanted to see if there are any final thoughts you would like to share with us.
I think a lot of our conversations since we started Quantix, I run into investors who have been disappointed with their experience investing in commodities, even when there was a pretty compelling reason to own them. And one of the biggest reasons I would say for that disillusionment is that the benchmark itself for commodities, the Bloomberg Commodity Index, has some flaws in its design, which has led to the fact that over the last 25 years, the actual price of commodities, the spot price that's in that basket, is up over 400%, but the index itself is only up 40%. So that has led to some frustration amongst investors. But the good news is, through smarter product design, those flaws can be addressed and open up the asset class in intelligent ways to investors that can really benefit from the significant benefits that a commodity allocation, particularly in these times, can provide.
Don, I wanted to thank you so much for sharing your perspective with our listeners.
Thank you. Thank you again for having me.
And thank you for listening to the EisnerAmper podcast series. Visit EisnerAmper.com for more information on this and a host of other topics. And join us for our next EisnerAmper podcast when we get down to business.